Welcome to StockMarketPending.com. We have a weekly chart, and the name is called Baidu. And we know right now that these are the tops up here, and they had a big split price. They blew out that last quarter, gapped up $90, everything that you could have wanted, and everything that would make you want to be in it now is that now that Google's going to enter back into China, I can find out where everyone is still bullish on Baidu, and they're not looking at where the downside in the name could be. We are still overbought, not overbought as we were, but on this weekly chart, which I'm showing you right here, is that the bull trend is getting toppy up here. This was the bull trend right up at $80 before they had their split, so it's going to show 80 some dollars here. But this whole pricing mechanism is that resistance line remains much overhead resistance. But on the 21st, Baidu reports earnings. We will be long, we'll have calls, and we'll have puts. So that's the weekly bullish part of this weekly chart, just like Apple did last week. But there's no name. There's no news out on this name. So when we cleared the 10-week moving average going up on Apple, then of course you had all those headlines coming out, and it got right back below the 10-week. This one, the bullish part is it did definitely have a closing price above the 10-week. It got 1 week, 2 weeks. It didn't go any further than 2 weeks below this blue line, which is our 10-week SMF moving average, and the 10-week is rising, which is bullish. And the close, that's bullish, fine. Because it is, as far as what the weekly chart says. What we are going to be doing is going over here, and we are going to pull out of the hat the very best trade based on the August contracts, based on the best risk reward ratio. So we're going to buy some downside puts down in here, and we're going to buy some upside calls. I haven't figured out which one. I know that that's what we're going to be doing. That will be in the next tape. Stay tuned. Come back to StockMarketPending.com. The point and the lesson that you want to learn is that we're going into the earnings season, and we're going to be on both sides of the market. Okay, it's very cheap right now to be buying down here at 94 cents. Whereas when we look at the spread there, Baidu closed at 73.53. So at the 72.50 strike, we're going to be looking at what kind of imbalances are in here. That will be on video too. So that as far as the options go. That's the weekly chart. Let's take a look at our monthly chart. This is a monthly chart, which is a beautiful chart. It's too bad the rest of the stock market wasn't like this. However, any pop up in after hours on an earnings report, we're going to be moving into sell short, because we believe that moving forward with Google moving back into China, that they're not going to be getting the revenues and all of the business as people had anticipated. So on the monthly chart, we're running into what we call a 3-month top here. The 10-month, the base of the last part of the monthly move remains at 60. So what does that warrant? That warrants us to be that that's where that support is. The last lows were right there. That's a short-term support area of around 62.74. So when we go over here and we start looking at, we're going to be buying that downside risk, because that's where the previous support levels are, is down here. Well, if they report bad and they go rumbling down, then they pay a lot of money. Now, on the other hand, well, the upside would be to start using a big pop, let's say an $85 call, to hedge the risk of a good earnings report for a very cheap price. However, we have to go through each side of the market to find the mathematical dollar imbalance ratios as market makers. That's how they rearrange and trade the options. It's not what we teach here is quite different than what you've read in books. Forget that. This is a market maker operation here. And basically what we're going to be doing is how do we get net long up and out of the money and down below the market, and then see what Baidu wants to do. We will end up trading the name intraday. So if Baidu wants to break higher, we'll trade it higher. If Baidu wants to sell off, we'll sell short the name. That's helping pay for one of the two sides that we take in the name here in the option. So if I'm gaining premium, let's say it's going up and I'm long, I'm gaining premium in the long side of the call, and the equity's going up. I'm gaining premium there. I'm getting paid twice, even though I'm losing premium over here. I'm getting paid 2 to 1 against my decline. So dollar debit ratio wise, I'm quite sound. And the SMF options trading platform addresses that. The options equity market trading platform also addresses that. And we are launching one of the most new generational platforms ever seen on the planet. And it's based on SMF market maker exchange prices versus public stock prices. That's the price that you see every day here. That's the public price. Our price and model is another exchange within the public price. And that's where the market maker model comes in and why we do extremely well. And I would say that 99% of the public out here have never seen that model, nor even understand it, and probably won't even understand what I'm talking about it right now. But anyway, once again, you've been given a gift on how to trade Baidu. If you're not trained to do these things, please come and join our free 5-day trial. We have an apprenticeship yearly school. You're transacting, you're working with these entries and exits.